Gold ETFs. Is there money in them? Well, we're going to show you one from NEOS, the IAUI fund. We're going to show you how it produces its money, how does it produce income, and is it a fund that you want to have in your retirement account? Hey everyone, welcome back to the channel. I'm Doug, the retirement guy with all your monthly ETFs. And this is a fund that's been talked about a couple different times on the channel. We get a lot of comments from people when we post something. They'll always throw out there, well, what about NEOS's IAU? And so we wanted to talk about that and see how well it's been doing, what's it producing with gold pricing going up. Is it really the fund of funds that we really want to be involved into? And is it good for a retirement account? Let's dig deeper into it. We do have to do the disclaimer, and that is past performances don't guarantee your future results, and this information in this video is for educational and informational purposes only. I am not a licensed financial advisor. I am just one who's been studying this stuff for years. The example and suggestions discussed here are basically not suitable for all individual situations, so always contact a financial advisor before making financial decisions. Well, the NEOS Gold High Income ETF, better known as IAUI. Now, we all know NEOS has been a great fund in many different areas. They've got a great S&P 500. They got a great NASDAQ 100. So now looking at the gold side of it, we wanted to see if this is something that we want to add to our portfolio, keep it into the family of NEOS, and see if it really works. What they do is they invest in gold commodities. The fund is actively managed and seeking high monthly income by investing in gold ETPs. Okay, and it's combined with its synthetic options of covered call strategies. So they're really not getting into the actual holding of gold or buying gold and selling gold. They're really trying to do this whole thing with that synthetic option calling and working with all the gold ETPs. So the yield, they have a yield right now about 12.52%, which is not too bad, with a 30-day SEC yield of 1.72. This fund came out of 6/4 of 2025, so really we're just shy, basically 2 months away from its birthday of 1 year. So we look at the management fees, 0.78, pretty common for this type of a application from the NEOS family. $419 million in net assets and over 7.1 million shares outstanding. So you can see that there's a lot of interest in this particular type fund. It does distribute its distributions on a frequency of monthly. So taking a look at breaking it down a little bit more, told you the expense ratio 0.78, 7.1 million shares outstanding. So far they got a 9.61% distribution yield. Now remember, we have not hit a whole year, and this thing will only show me, so up to date of what we have, and paid out $5.69. Now, when we take a look at the range, we're at $48.25 to $64.58, and looking at the time of the information at the time of the video, we're at $59.21. So you're kind of playing, I'm going to call it on the high side of the middle. Okay. So we're about $5 difference from the actual extreme high, but at the same time, we're $10 above the low. We look at the chart year to date. Okay. Remember, year to date is going to be from January 1 up to April 17th. We're up 5.92%. So that's not bad so far. It basically just maybe a click over, 1.5 percentage points per month. So you can see we had the drop off, and we're seeing this a lot in a lot of common funds, and we've seen the big drop off in that end of March, early April. What happened there? You have to always look at what's going on, news cycles, geopolitics, Iranian war, all of that ties in together to where we saw the gold side of things drop off. And now since then, it's starting to recover back. So that's kind of another one of those March, April buy point drop-offs, buying the dips as they always call it. That would have been a great time. Now, looking back, we're learning. That's what part of this video is all about, is learning, giving you information about learning of this when you can see drips on charts. When we take a look at the past 12 months, now remember, this fund has not been out a full 12 months. So this thing has had, it's got just almost 10 full months into it. And you can see that it's up 18.10%. That's even including the drop off from March. So 18.10% is a very strong growth package once you then add into the dividend side of it. So very impressive numbers so far. And you can see where it started off low back when it started, when it first started off in June, trickled out, trickled out, trickled out. Then it started climbing its mountain to its peak, dropped off the cliff, and now is coming back, creating a second mountain build. So will it get back up to $64 a share? Well, we don't. No one ever knows. We don't have that crystal ball, but the numbers and the what it shows us is the potentially is there. Taking a look at the assets under this thing, and this is where it really gets into it. You can see what they're using is they're using the Goldman Sachs physical gold ETF. So what they're working off of is this is where they're selling their covered calls and working in that market. They also have some, you can see on here, some puts that they're doing that they're working off of another ETF. And that's where you get the synthetic side of it. That's where you get the covered calls, the ETPs. All that is all working off of the Goldman Sachs Physical Gold ETF, better known as AAAU. And then you see the treasury bills that they put in this kind of a place where they rest their money when they need it, collecting some kind of interest off of it. When we look at distributions, is this a qualified income fund? Well, we start back when it first started. It was down, coming in above 50 cents per share. Then it slowly had its growth up, and it hasn't never come down. So it's been one of these funds that's slowly been adding and surely to the distributions, not overpaying and definitely not underpaying. When we take a look at the going backwards with the year to date and the total returns, since inception, this thing is up 36.73%. Now that's in there because of what? It's not a full year. Okay, once we hit that full year, come June, you'll see the calendar mark to where the 1 year will have almost identical to the inception side of it, about 36%. Year to date, past almost 4 months, 9.23%. And over the past month, it's only down 2.48% total year to date performance. So is this, again, another signal to where it's down? Is it a buying point when you see positive numbers in both the other categories? And a lot of times I will look at that and say it's something to evaluate. It's something to look deeper into. What gets me is the year-to-date runs. Year-to-date total return, 9.23%. Okay, it only dropped off in that late March, early May, that it dropped off below the 0 percentage points or into the negatives. Everything else has stayed above that mark. That's a strong positive review of this. When you look at that 1 year of 31.68%, that tells you the thing has slowly had its growth. Even with the big drop off, it's maintaining it. So the earlier you get into it, the better off you're actually being in these predicaments. So I always tell you, past performance does not guarantee future results. You have to look at past history to what the future will be. Where do you see the gold going? What's going to happen with gold down the road? So is this one good for retirement? Well, I'll be honest with you. The thing that gets to me is this one falls in two different categories, growth and income. And if you remember what I do is in our portfolio building for retirement, we have a foundation fund, we have a growth fund, we have an income fund. Income is what we're living off of, paying our bills, doing everything. Growth is helping taking care of inflation. And if the income falls, I know a lot of you probably had this. You've had your income categories drop down. The growth is slowly building up. This one here can go either way. I like it more on the growth side than I do in the income side. What I would do with this one is almost exactly what you would see in that total return number. I would take the growth side and put the investment into that, take the yield and drip it, which is reinvest every yield dollar back into buying more to get where we were getting a 31% return on our investment of our growth. That can make some big difference. Now, that would be something that you would do probably for 1 to 3 years and reevaluate. Always reevaluate your portfolios to see what adjustments need to be made. That would be my recommendation. That's where I come from it, and that's where I use this gold package for. So, is there money in the gold ETFs? I think there is. What's your thoughts? I believe that the NEOS product does a very good job in both income and growth. I kind of give it that thumbs up. I throw it out to you. You tell me what you think. Leave a comment down below. Do you own IAUI? If you did, you're probably very happy. I'd love to hear from you. If you've missed out or you're thinking about doing it, love to hear you too. Love to see your comments about it. And also, don't be afraid to hit that like button if you like the performance that we're giving you and the videos that we're holding, because it all helps the algorithm with the channel.
Thank you for watching. Press the